We begin the business section tonight taking the pulse of the U.S. economy. It shows little sign of life, and many investors and economists hope the Federal Reserve would provide a much-needed spark. But today, the Fed says now is not the time to act. This despite painfully slow jobs growth and an economy that is, in the Fed's own words, decelerating. The U.S. economy continues to search for direction. It's growing at a paltry 1.5%. U.S. unemployment remains high at 8.2%. And Wall Street and investors were hoping America's central bank, the Federal Reserve, may take steps at its most recent policy meeting to try to breathe new life into the stagnant economy. No such luck. The Fed saying it will remain on the sidelines.
It's a question of has the bar been set too high, right? Can the Fed actually appease investors given these concerns about slowing growth? And can the Fed really do much at all given yields which are already at panic low levels?
No bold statements from today, even though the U.S. economy, by the Fed's own account, is decelerating. Interest rates will remain unchanged, and the Federal Reserve is comfortable with the rate of inflation.
It's really not apparent that the situation is bad enough to really waste the ammo.
It may sound like an odd defense, considering the pall over the U.S. economy. On the lack of news, stocks fell and the dollar rallied against the euro and the yen. It raises the question, how will history treat members of the Fed? Consider this. In 2004, former Fed Chief Alan Greenspan was the toast of Washington for his approach to monetary policy. By expanding the economy when many analysts were growing alarmed about the possible bubble, Greenspan said he was protecting the economy against potential risk, or, quote, taking out insurance. But when the bubble burst 4 years later, he was criticized for not tightening monetary policy to avoid a bust. The Fed says it will closely monitor incoming information and may opt to stimulate the economy at its next meeting. And the Fed meets again September 12th and 13th, so we'll do this again in about 6 weeks. And many economists believe it could offer some assistance at that time in the form of buying up hundreds of billions of dollars in government and housing debt.